Life Interrupted Post-Pandemic Claim Insights, Amplifying the Advisor's Role in Risk Advice. What we'll do is we'll uncover the invaluable information that help you bridge consumer knowledge gaps when it comes to choosing the right coverage, plus gain expert insights on how to elevate client satisfaction, ensuring your clients are exceptionally supported during claim time when life plans have significantly been disrupted. Now, our presenter, Adam Crabb, has over 25 years in financial planning, life insurance and advisor education. He's also the co-author of Zurich's award-winning Cost of Care white paper. I've read that, it was really, really good. A fellow of the FinCEA, holds both CFP and life risk specialist designations. Welcome, Adam.
Thank you, Jade. And good morning, everybody. It is so wonderful to be here at Congress. For those of you, if you're looking at me thinking, gosh, this face is familiar, many of you may have been in yesterday's CFP Professional Connect workshop, which was a fascinating experience for those CFPs in the room, really learning and leveraging off the experience of peers and colleagues. Now, as you may have heard in the introduction today, a bit of a risk flavour. And if you're thinking, gosh, I'm in the wrong session, if this is kind of insurance focused, there's some good news. Regardless of your speciality, I have no doubt that there'll be some value in this session for you. Something that you might be able to take back to your business, maybe spark some conversation with many of your clients, and in fact, maybe even bring some of the attention, some of the insights to your staff and even to yourselves, your family. And the way we're going to do that, I think, as Jade's very well put, is we're going to step you through some of what your consumers, those perhaps yet to even seek your advice, are thinking. We're going to do that through sharing some insights. I'll provide some of that expertise, if you will, but the ultimate aim is to really generate that heightened awareness and harness a deeper relationship with your existing and potential clients that walk through your door. So the first thing we're going to explore here, and perhaps a question that many of you are probably chatting when it comes to Congress yourself. You've probably seen colleagues you haven't seen for some time. Inevitably, the question posed to you, how are you? How are things? What tends to be the response that most of us provide in that instance? Busy. 100%. Challenged. Any others? Busy, challenged. Interesting that this is kind of where I'm going with this particular session. The first thing that was mentioned there was busy. And I have no doubt that when it comes to our lives, all of our lives, whether it's in a professional capacity, whether it's outside of work, we are in fact flat out. Regardless of what we're doing, I think work does tend to be a significant focus for us. And actually reading recently through the Alan Rickman diaries, I read this quote and it really just resonated, I think, not just one that reflects on myself, but many of the advisors I speak to right across the country. Work is a pure focus. It's very important. It's a central part of who we are, what we do, and perhaps for many of your clients, the first thing they may say to you is, hi, nice to meet you. You know, in my form of work, this is my vocation. This is how I earn an income. But we are all busy. But this quote, I think, that reference at the bottom section about the things that we do outside of that often take a back step. And I know for me, with that focus on work, focus on career, you know, the rest of me does in fact hang around like a jacket on the back of a doorknob. Now, if you've read through the census data, I think this is something which really resonates with many of your clients. Do you often try to reach out to them, maybe in lieu of a pending review? So let's catch up. And the response, of course, is love to, but too busy. With the ABS, the census data, you can see that almost 40% of Australians have disclosed that they're working 40 hours or more per week. And in fact, if you're looking at that, think, well, that's definitely an area where you as an advisor are probably playing. We kind of instinctively thought that was the case. So much so that we reached out to a significant number of life insurance advice firms and simply asked them the question, how are things with you? How's the work? 60% of them said to us, we are doing at least 50 hours or more. Some shared they were doing 60, even 70 hours worth of work each week, taking it home, doing it on the weekends, plugging into that work, often late into the night, just to kind of get through much of what is complex in the life insurance space, the compliance side of things, the burden, if you will, being a little bit heavier than it ought to be. But that is indeed leading to this notion of increasingly doing excessive amounts of work. Now, I've no doubt many of you in the audience are leaders within your advice business. And it got me thinking, particularly from a client view perspective, on this notion of being busy and how often we actually choose to dial in to our work, often at times which are not perhaps or less than ideal. I read through this particular situation and thought it may be one that resonates with you. This was a business leader who shared one of the monumental moments in their life, which was the birth of their twins, twin boys. And he remembers it because he was rushing through the hospital doors being on a Zoom call. Anybody here guilty of this? Where we're really trying to multitask, manage certain things, where we're busy at work, but we really have to dial into a meeting. This was certainly true. And it really got this particular leader sort of reflective, because one of the things that they were unwittingly doing was sending a message to their staff, to their teams, that this is perhaps a standard, perhaps what is maybe expected of their employees. Now, I've no doubt you've got staff in your business that love nothing more than to be checking emails late at night, dialing into meetings outside of typical hours, maybe even plugging away and doing work, doing emails over the weekend. But one of the things that this leader has done, and I think many of us could actually reflect on in our own business, is the opportunity to maybe just take that step back and think, as a leader, what message am I sending to my own team? We are all busy. And in fact, in this particular case, a few weeks after this particular birth of these twins, the leader actually was in a meeting himself, saw someone dial into that meeting who should have been on holidays, and in fact even had the kids in the background, and said, look, I really appreciate your commitment to your work, but perhaps why don't you take a step back out now, spend the time with your family, and then dial back in at a later stage. Now, so I think the key message here is certainly to encourage our staff to work, but if this is something which you would love to maybe better manage in your own situations, I think one of the great little tools that we can now do is the ability to actually schedule emails outside of the odd hours that you may be pumping these through, and actually having them sit and enter the inbox at a more appropriate time that may resonate particularly well with your staff. One final point on this notion of work is that for many parents, males in particular, there is a level of reluctance to sort of talk about the sort of child care responsibilities that often they have now, particularly in a world where much of us are still working in a hybrid capacity, with many of these people really reluctant to sort of share many of these responsibilities, because how would this appear in their maybe leadership capacity or their colleagues in the workplace? Now, being a life risk focused session, I thought it was kind of prudent to start with these facts, because when it comes to the applications, the insurance proposals that we receive, often there's a level of work that people are doing which can be quite excessive. And we know much of the data tells us that when we look at this excessive working hours, particularly over 55 hours worth of work each and every week, so effectively 11 hours on that Monday to Friday, there is increased morbidity and increase in mortality rates. It's why, as insurers, we tend to be a little hesitant in offering competitive terms when it comes to people really plugging away doing a lot of work. So I think it's important to sort of set the tone for this session around life and those potential interruptions, starting first and foremost with, of course, work and our ability to earn an income. And when we consider what consumers are going through, we know much of them as well are very busy, but we love to sort of check in with not just our own customers at Zurich, but with the broader consumer landscape, particularly those who are yet advised, yet to step into your office. So in fact, last year, 2022, we did a bit of a survey to try and find out what people are thinking, what pressures they've got, and when it comes to their own safety nets, we simply asked the question, if you were to be impacted by a loss of income, tell us what sort of impact would that have? And you can see just over 3/4 of people said there was going to be some, if not a moderate or significant impact to their situation. What's probably no surprise, we asked this same cohort this year, and the numbers have indeed worsened. So there are significant financial impacts that people have, but equally we're getting a sense that there are things that people are concerned about that are not necessarily in that realm of certainly financial and perhaps even advice. So there are mental health stresses, concerns about potential serious illnesses, given that many people are in fact living paycheck to paycheck. Their ready access to cash or capital is starting to deplete. And this notion of employment security in their workplace is certainly significant. A number of people are going through restructures, being made redundant, and it really is an area which is really resonating with many consumers. And I think, of course, from an advice perspective, if you've got clients that are in this situation, given that many people hold significant amounts of cover through their superannuation, this is likely to cause certainly a concern, but I think an advice opportunity, and we'll look a little bit more at that a little later on in this particular session. So given this context, I think given we're a life insurer, perhaps call us a little selfish, but we really wanted to find out, well, what are now the trigger points for people to perhaps think about, take a proactive stance, and consider their wealth protection or life insurance needs. So we simply asked this question of over 1,000 consumers, and the most common response, in fact 90% of people, said it was when they start a family. So the joining of people together, partnership, marriage, birth of children, it's these sorts of life events which are actually front and mind of consumers at that point to think, wow, I've now got a level of financial dependency, be it a partner, children. This is something I need to think about protecting. What sort of position would I be in should something turn south? So if you're curious around this notion of families, I certainly was. You know, what do families, what does marriage look like in Australia today? The average age of marriage in Australia has been on a steady increase over the past 20 years. You can see there for men and women, 32 and 30 respectively. Same-sex marriage coming in a few years ago peaked at quite a higher age. It's now started to reduce almost in line with the non-same-sex marriage. You can see there 36 for men and 33 and a half for females. So the average age, particularly if we look not just at the marriage side of things, but birth of children, if you're curious, so the maternal average age for first-time mothers hovers around that 30 years of age, with 30 to 34 now the highest proportion of mothers by age. And of course, this is just looking at the natural birth. Of course, we have a significant amount of adoptions happening in Australia. The age of those, typically parents, that are venturing down that track, a little higher than what we saw on the previous slide of 35 to 39, with a little over 200 adoptions happening in Australia. If we flip this around, marriage obviously a point at which people consider their life insurance. Equally, once things do the opposite, in fact, we've got the 7-year itch, and then we've got the 8-year ditch, as you can see here, with the median years of duration, marriage to separation, just over 8 years, and from marriage to divorce now, 12 years. So we think about the life insurance aspect, even maybe the structures that you're putting into place through self-managed super funds, through superannuation ownership in, where there's life insurance or no life insurance. I think these are opportunistic insights to really explore your clients, the experience that we're tending to see when marriages come together and then dissolve, and obviously those advice opportunities that relate in that. So first, most common response was around this, these unions, this starting a family with 90%. The second most common response, folks, was when people suddenly have a significant financial commitment. So this could be motor vehicle, it could be a residence, an investment property, but 80% of people said as soon as their situation changes financially to a degree that they then suddenly have a significant financial commitment, be it a loan, asset, that is certainly a driver for them to explore this idea of life insurance and wealth protection. If we look from a debt perspective, average, I think, mortgages in Australia today are hovering around that 600,000. But when you look across the country from a state-based perspective, New South Wales is in fact leading the charge with an average mortgage of a little over $720,000. Here in Adelaide in particular, it's just under $500,000. I think Victoria is sitting in second place, followed by Queensland. So just really showing a bit of a state of play when it comes to the average. This excludes investment properties, but just purely residential properties. But over $700,000 as an average debt in New South Wales is just incredible. A challenge, I think, for many first homeowners who are looking to really venture into this notion of property. And I think when you look and cast back over the last few years, the debt levels have increased at a fairly significant 32%, yet the income over that same period has only increased marginally by about 12%. And are people overcommitting? Are they extending themselves? Have the interest rates been at a greater rate than perhaps they were otherwise expecting? Are there more to come? But this notion of property acquisition, very high debt, and I think this notion of life insurance really does come to the fore. And in fact, I thought at this point it's probably worth just reflecting on your clients. If you're a retirement advisor, maybe reflecting on the adult children of those retirement clients. What would these people do if they're in a position where suddenly that income was to stop? Maybe their ability to service a debt was suddenly really stretched. So here I thought I'd give you some insights into what's actually happening in our business at Zurich. We are one of the leading providers of retail life insurance advice in Australia. And in fact, just today, at Congress, if you will, there will be 32 new claims that we pay to people across the country. We paid 32 on average yesterday, we'll pay 32 again tomorrow, and so it continues. Now, there are other insurers in the room, so certainly these figures across the industry are significantly greater. But I think we really need to reflect and even maybe share some of this information. If you're providing newsletters to your clients, if you are active on social media and like to put out little did you knows about what's happening across the advice landscape, maybe share some of these stats with those clients and just see if it is a level that's likely to be receptive, particularly those that have maybe had a change in marital status or potentially extended into a new or an increased level of debt. So 32 individuals and families have felt some form of financial relief that we've provided over the course of just today, again, on average. If you're curious as to the sorts of experiences we're having, these are likely to resonate. So if you are in a position where you want to be readied if a claim was to enter or a situation was to emerge in your business, one of our leading causes of claim is musculoskeletal. You can see their injuries quite broadly are in fact the third highest contributor financially across Australia to a health spend. If you're thinking that maybe part of this is towards the mature age, where we know injuries can be devastating to many very, very mature age people, you can see the vast majority are actually of a, I suppose, quote unquote working age, between the age of 15 and 64. And in fact, falls do contribute to a significant amount of these overall injuries. If you're dealing with tradies, folks, anyone that has plumbers, electricians, carpenters as part of your business, those who will often say, look, I just need some coverage while I'm on site, because obviously that's my greatest risk, feel free to share with them that in fact most of these injury events actually happen at home, not at a workplace. If I share with you another one of our top claimed events here, 1 in 5 will be due to a mental health condition. Mental health, mental illness is prevalent across our country. In fact, we spoke about this yesterday at the CFP Connect. We were diving into self-inflicted injury suicide, which is now the leading cause of death in Australia between the ages of 15 and 44, and around the second or third largest between the ages of 45 and 54. But when it comes to mental health, there's a variety of different mental health events that can lead to people being unwell, unable to work. And I've tried to quantify these here for you through things like anxiety, through substance use. And you can see with some of these conditions, so females, for example, they experience a higher rate when it comes to anxiety disorders. But in terms of self-inflicted injury, that's more common among men. During COVID, 11% of the population actually received some form of medical or Medicare subsidised assistance because of a mental health situation that they were going through. And so I think this really just paints a picture of the sorts of experiences that certainly we are finding, and you in fact may be finding with many of your clients. And when it comes to mental health events, often it's behind sort of a mask, isn't it? It's not something that's often immediate. So, and I think when we consider what clients are looking for from that advice relationship, often it may be just a level of general interaction. How are things? How are you going? How are you feeling? Because often there could be okay at the surface, but often there could be a level of discomfort once you kind of remove that mask and actually work through what are the concerns of that particular individual. And our third most common form of claim, folks, probably no surprise here, 1 in 5 new claims we receive relates to cancer. In fact, it touches every one of our products. Death, terminal illness, total and permanent disability, a significant number of cancer claims relating and impeding people's ability to work ever again. Trauma, of course, and even income protection. So cancer, one of the things you may not know, particularly not only our own experience, but right across the country, while the medical advances are improving, while the mortality rates are looking really healthy, the incidence rates are doing the opposite. So far more people are actually becoming diagnosed and are financially in distress. And we're going to sort of cover through what some of this looks like from a medical perspective shortly. But I think this notion of this immediacy, this life being interrupted, particularly through our own experiences, might even shed some light on what consumers themselves are thinking and perhaps how they would be better placed if something was to really take a turn in their situation, particularly when they reflect on that, robust strategy that perhaps you've put into place for that particular client. So why is this insight into life insurance perhaps relevant or topical for this particular session and for you? What most consumers are telling us, that it's often these sorts of events that happen to people they know or indeed themselves, which is actually a trigger point for them to go out and seek life insurance. And as you'd appreciate, if you've suffered an injury, if you have mental health issues, if you're diagnosed with a cancer, and then think now's the time to go and get life insurance, that can be problematic. But 70% of people are saying as soon as there becomes an awareness piece of themselves, their family, someone they know, a friend, perhaps a relative, that's often a trigger point. So perhaps the question that maybe you can do, and one of the first of a couple of action items that we'll talk through in this session, is what is your client's strategic plan? If it's a retirement client, from an intergenerational advice, that next generation of client opportunity, what is that next step that potentially could be added, if not to an SOA, maybe just to a file note, an interaction around how would those clients be? What would that impact be? Not necessarily to them, but to you. Would they call upon your client and then ultimately you for a sense of direction? And I think if we've got these actions documented, we know one of the code of ethics, of course, relates to documentation as being critically important. But this is something I think which should be not only an ability for you to sense check what the client's thinking, but a bit of a proof point. If something does crop up a little bit later on, this idea that should something actually go wrong, that at least there's been that interaction for you to engage. Now, of course, for many of you, if you don't offer life insurance advice as part of your proposition, there is some good news. There are many life risk specialists, in fact, some in this room, that'd be more than willing to take on referrals from your business. And if you're concerned, thinking, look, I really don't want to potentially lose this client, you've got a solid relationship that you've built, and that ability for that to maybe be taken away is less than desirable, I've no doubt many of these life riskies will be able to put you at ease, to say they have nothing that they are more concerned about. Their focus is purely on life risk advice. They don't have time to look at superannuation, wealth accumulation, etc., etc. So I think that should be a bit of a relaxed concern if it is indeed something that comes to mind. Another element to look at this, if it is something that you're looking to revisit as part of your advice proposition, maybe re-entering, having a bit of a spark of interest when it comes to life insurance advice, is maybe getting it wrong. So what I thought I'd do is show you 6 different situations here, and I'm kind of curious to know whether if this is, or any of these, are a level of concern for you. The fact that maybe somebody is looking to relocate and move overseas, potentially looking at cancelling their insurance after they've had a cancer diagnosis. Would that concern you? If somebody's providing insurance advice and they decide to scope out part of their insurance portfolio, would that concern you? I've no doubt that for most, if not all of us in this room, I'm hoping that each of these would raise at least a question or two about your interaction. And I think what's important to note here is these are actual examples of cases that have gone in the last 12 months to AFCA when it comes to life insurance and advice. So this, folks, is good news. You don't need to be an expert, a technical nous, or someone like me that loves sitting and reading insurance PDSs. Yes, I'm admitting that publicly. You don't need to know the ins and outs of every single contract on market. There is an opportunity for you to not only provide value, but at least spark that conversation with any of your clients. Whether it relates to that individual or someone up or down the chain, there is certainly value there to be had. So how can you go about doing this? If you're considering this idea as a valid one, perhaps for your practice, maybe even getting some of the staff within the business to start having these conversations with their families, with others in the community, particularly if you're part of a regional or rural location. One of the ways that many life advice providers are doing this is through proactive health. They're simply sharing experiences that they're having, either through claims or what's happening broadly on market. But proactive health is becoming very, very topical. I know there are some businesses that are focusing purely on advocacy, where this notion of a betterment through financial support, but even outside of that financial realm, is playing a critical role. So when it comes to proactive health, if we look at one of our top claimed events, of course, being cancer, Let's just get a bit of a state of play as to what's happening here from an awareness perspective. So the cervical screening cancer program at the moment, we have seen, in fact, across the three main, being breast and bowel as well, there has been a betterment given COVID. We saw a significant decline in the amount of people across the community that were actually going and getting themselves tested, often begrudgingly. Who loves doing these sorts of screening? I think none of us, none of our clients. But when it comes to cervical screening, the strike rate, if you like, is just over 60%. Now you might look at that and think that's less than ideal. Just 60% of people are going through that process when it should be ideally closer to 100%. Well, of the three, that's actually the highest. So breast cancer was sitting at around half. It's around 48% of the population are participating in breast screen. So again, not an ideal situation. A vast improvement though, during COVID, where just in the month of April 2020, a number which was at 75,000 for the month of April 2018 prior to COVID, that number dropped to a significantly low 1,100 for that same month. So we have turned the corner. We are starting to improve. With bowel cancer, that is the least positive here, with just under 43% of participants that should be getting these tests are actually getting these tests done. Now, you're probably thinking, is this an area that I need to sort of branch into when it comes to my advice? One of the things that we're finding from many consumers is there is a real appetite for general financial education and information. Many consumers are not necessarily finding this information out. They're reluctant to even check their emails, their postal mail, or go through that process. Often, many consumers, do you find these clients need a bit of a nudge, a gentle push in the right direction? Well, perhaps this might actually help encourage them. So across all of these screenings which are done, the first one we'll cover off here is bowel cancer. For every 14 of these screens that are done, one comes back positive for something. Further investigation needs to happen. And of those, 1 in 41 is a confirmed or suspected case of bowel cancer. So around 3 in 570 odd of every test that's done is a confirmed or suspected case of bowel cancer. For breast cancer, that number's not too dissimilar. So for 3 in every 500 breast cancer tests come back with a confirmed diagnosed case of breast cancer. There's some good news here. The vast majority, which is that light blue on the right, really indicates that most of these, so around 60%, are in fact picked up at an early stage. They're classified as small. So the ability to manage, to deal with that situation is greatly improved. For cervical cancer, it's around 1 in 1,000 that come back with cancer, with around 1 in 60 coming back with some form of abnormality that needs to be further assessed. So I think here understanding the incidence is only part of the story. There was also a betterment in this proactive approach when it comes to mortality. But I think the first thing we need to understand and explore here is, why is participation so low? I've no doubt many of you probably already know the answer to this. We talked about it earlier, right? Too busy? Are many of us too busy? So we wanted to really confirm, do our own research and understand just how much of this is in fact true. When we did a bit of digging, we found that 1 in 5 people thought they only needed to do these tests if they in fact were showing symptoms, found a lump or some other form of symptom that made them want to go and seek this. 1 in 6 confirmed, yes, like all of us, we're just too busy. And perhaps more appropriately, 1 in 7 just couldn't be stuffed, weren't bothered. I won't ask people to put their hand up in this room, but I'm sure some of us are in one of these sorts of camps, if in fact we have yet gone down the path of having these screenings. But let's look at the mortality side of things. Why is this of increased betterment across any of these, whether it's bowel cancer, whether it's breast cancer, or in fact with cervical cancer? There is a greater improvement here on the mortality information for our clients. So basically them being proactive, you're talking about a 50% increase or improvement in the overall lowering of that risk of death from some of these particular conditions. So it is a topical one. And in fact, if you wanted to add to this, if you really get excited about being proactive, providing this sort of guidance to your clients, this is something that I would recommend not only for your clients, but you yourself. If you want to know about your own predisposition to cancer, has anybody completed this recently? So 1 in 3 of these cancers which are diagnosed are actually preventable. And there's a very simple way of going out to find out where you sit on the risk scale. So 2 things you could do. You could either scan that barcode on the right or simply do an internet search for 1 in 3 Cancer Council, and the first link that pops up should in fact be this 10-question cancer risk quiz. Now I have to be honest, I did this myself. I don't smoke. I drink in moderation. So I thought my risk of cancer was actually pretty good. When I jumped on and answered the 10 questions, there were 2 or 3 areas where there could be some significant improvement. So it was a surprise for mine. But these clients that are often looking for those value adds, and I've no doubt for many of you, you're trying to tick off the interaction that often you have with many of your clients, those sort of touch points throughout the course of a year if you're providing a fee-for-service arrangement. But this sort of proactive nature might really get them interested and perhaps even some tongues wagging. And I know for many risk advisors, often these sorts of questions are being positioned at a time when they're perhaps looking to revisit the appropriateness of their current insurance contract. Are many people curious about or looking to maybe minimise any premium adjustments on policies at the moment? Maybe even looking to cancel contracts? If that's the case, folks, maybe get them to do, if not a quick quiz, get them to do a full health check. Go through the screening process, the cancer screening that we've talked about. Just going to their local GP, going through a few tests. Yes, it's cumbersome, and of course we know they're far too busy. But you talk to any life insurance specialist, and I could almost guarantee that at least one of their clients, if not more, that has done that, has actually come back almost hugging that advisor saying, thank you for getting me to do that because I've been diagnosed with a specific condition. It is critically important before any adjustments made to any policy, be it retail advised, group, even direct. Get your clients to be a bit more proactive. Have these discussions, again, with your retirement clients about their children so that those kids aren't inadvertently disadvantaged by making a proactive decision without the value of advice, which means they've actually lost out on the potential ability to claim benefit and be financially vulnerable for an extended period. Yes? That's a good question. So for those that didn't hear, the question about the screening is, going through these screenings, wouldn't that inadvertently perhaps prick the ears up, not that you use those words, of an underwriter when it comes to an application? I think it's a valid question. But with underwriters, many of them now are quite receptive to people taking a more firm view on their own health and wellness. If they've gone through a period of grief, for example, reaching out to a grief counsellor specialist for that single event, while many years ago may have seen an exclusion for mental health events, these days there seems to be a level of, well, that doesn't really make common sense. It's related to a single event that then shouldn't impact that individual's ability moving forward. So similarly with cancer screening, it's something that really should be encouraged as part of the client's own road to wellness, etc. So yeah, the short answer, that's a long answer to... I'm happy to take that one offline if we have a chat after the session. We can talk about that. So a couple of specific cases there. So we've talked about some of the higher level things, the sorts of experiences, the top sort of conditions, but I thought I'd make this a little bit more personal. I got access to our full suite of claimants across our income protection book. Why I'm focusing here on income protection is because we pay more income protection claims in our business than death, terminal illness, TPD, trauma, health events combined. So the experience you're likely to have with clients who have their lives interrupted is likely to be during the course of an income protection type incident, either a temporary or permanent ability for them to actually earn an income. Now, while we pay a significant amount of claims very short term, I wanted to step you through some that are experiencing claims over a longer period. So here, our first example is for a female based in WA with an autoimmune rheumatoid arthritis, with her claim at the age of 31. Parts of the work we did, and Jade mentioned this in the intro, being a co-author of the Cost of Care white paper, rheumatoid arthritis is quite an expensive condition. we believe the out-of-pocket costs are in the order of about $30,000 each year for RA, rheumatoid arthritis. So the claim we received at age 31, this claim is now in its 18th year, and the individual is currently now aged 49. Another female from New South Wales, aged 34, diagnosed with lupus. Her claim has not been quite so long, but she's currently in her 7th year of claim and is now aged 41. Brain cancer diagnosis from Victoria, claim aged 51. This income protection claim has actually finished, has ceased, but regrettably so has the client's life. Affective disorder, depression, this was a secondary condition, secondary off the back of an initial cancer claim, which is then extended into a period of depression in this particular case. From South Australia, the client aged 54, that policy and that claim ended once the policy hit aged 65. And then a liver cancer example on the far right of screen, with the age at claim being 55 and the current age of the client being 61. Now, this is certainly the minority of cases, looking at claims that actually happen over a longer period. You're likely to find that you may not even experience clients that have income protection claims over a significantly long period. But I can tell you from personal experience, looking through the copious lines of spreadsheet data as I've done, we pay a significant number of income protection claims over a very long period, many of whom are not necessarily totally disabled, so unable to get access to a TPD benefit, but are partially disabled. And when it comes to this idea of cost, folks, not just income protection, but if we understand the medical industry, many of these medicos are actually trying to go into bat for many of our clients and the industry. So this I actually pulled out from the Treasury submission made only recently by two medico professions here, the Private Cancer Physicians and the Rare Cancers Australia, both of whom have come together and basically said, look, these costs that people are incurring relating to their cancer treatment is overwhelming. But this great quote, which I think here again you might be able to resonate with many of your own clients. Cancer treatment should never come with a question mark over whether the patient can afford it or not. How many of your clients, or maybe people in the community, if they're suddenly looking down the barrel of, say, a cancer diagnosis, would suddenly find themselves in a situation of, well, I need to get access to something? Let's explore that. For many people that have access to not you as an advisor, but maybe they've just simply turned up for work and got access to a level of default cover through their superannuation fund. These stats from APRA show you the average sums insured across death and terminal illness, total and permanent disability, and income protection. So 220 is the average for death TI, 187 for TPD, and just over $3,500 a month for income protection. But of course, when it comes to a cancer claim, and if clients are reaching out to a super fund, the response from the super fund is likely to be, are you terminally ill? No. Does it impact your ability to work ever again? No. Maybe let's look down the barrel of an income protection claim potentially. But when it comes to you and the valuable advice that you provide, the APRA data shows a significant uplift in what the average sums insured look like across the same benefits, life or death and terminal illness, TPD, income protection significantly increase, and of course the addition of trauma or critical illness cover, hovering on just south of $270,000. So what is it that our clients, or what are people in the community doing where they haven't taken that proactive step into their life insurance needs, their wealth protection strategy and solutions? Do you know anyone that's going through crowdfunding at the moment? Anybody looked into crowdfunding even in your own area? It is certainly a significantly growing area where people often have no choice but to reach out to the community for help. It is an area, as I say, of increased interest. But it got me curious. So what I did when I was actually at the office in North Sydney, I simply jumped onto a large crowdfunding website, typed in breast cancer near me, and hit enter. And I was stunned. There were hundreds of individuals that were reaching out for support, have dialed in, registered, told their story, and hit enter, hoping that some people would actually, maybe bite, or that the story would resonate with them. There were far more than images I could put on screen, And no, you're not going blind. I've blurred those out just to kind of keep these people's situation and circumstances private. But there was one, in fact, I think it was the third story I read, which I thought was worth bringing to your attention. So the individual was Chloe. This is her words, not mine, but literally a screen grab from the crowdfunding platform that they were using. So the oncologist has said that the best option for her is through a combination of chemotherapy and immunotherapy. But there's a slight hitch. What would you guess is that slight hitch, folks? Yep, cost. So for her cost would be 60 grand. But of course, had the meds been on the PBS, that cost would be south of $300. Now, if you're curious as to the triple negative breast cancer, again, full transparency, this is one of the rarer forms of breast cancer, with only around 15% of cases forming this particular part. But of course, the costs can be astronomical. And if I can share something with you, again, from our own experience, breast cancer is one of our leading trauma claims as part of certainly our experience at Zurich. So I think these sorts of stories maybe resonate with clients because this is effectively the reality of what's happening and perhaps people's failure to take that proactive stance and understand what does an impact like this have to me and my situation. Question? Great question. So the question was, if you're looking to recommend or maybe provide some guidance on trauma insurance, where can you kind of get access to costs? Words to that effect. I've not paid you, sir, for that particular question. But the Zurich Cost of Care white paper, it's been out a few years now, and there is some good news. There is a volume 2, which is on its way. But that was really a guiding light for us, because when I joined Zurich back in 2018, having come from an advice background, I felt there was a real gap, a real absence of that sort of information that you're looking for. So we went about and thought, well, as a life insurer, why not own this? Why not at least do the due diligence and provide that research and insight? So we spent 12 months building that particular piece of work where we spoke with medicos, tried to get an understanding, spoke to specific foundations, and were able to quantify the costs and the incidents and even the recurrence information for many of those individuals. So if you're curious and want access to that documentation after today's session, head over to the Zurich stand. Of course, if you're listening to the recording of this, reach out to your Zurich and BDM and they'll give you access to that information. It's quite prescriptive and specific as well. I'll pay you later for that particular question, I'm only kidding. So philanthropy is not necessarily new to us, and in fact, Australia sits particularly well globally. I think when it comes to philanthropy Australia believe around 70% of us are actively givers. We have no hesitation in giving even small amounts to people in the community. It's something which really resonates with many consumers, this notion of giving. Giving financially obviously is very important, and one slide I want to share with you from our own business, just sort of showing what we do at Zurich when it comes to not just philanthropy but community. It's something we're very proud of, something we publish on our website for consumers. Many younger clients are looking for not just what is it that a life insurer provides, but how are you giving back to the community? What's that social awareness responsibility that looks like? This is just a small selection. But I think when we think about philanthropy, folks, we need to look further than just cost. If I was to get a show of hands, how many in the room provide some form of pro bono advice? There's a few of you, that's fantastic. So when it comes to this notion of giving, particularly giving when something happens in somebody's situation, this quote from this great song, whatever mess you found yourself in, regardless how you got there, when the edifice has all but crumbled, moved away, left you standing there, you're defenseless, you're looking for help. What is it that you can effectively do? The song is Love Can Heal, but I think when it comes to this notion of gifting, philanthropy, even when it comes to affection, love, your clients, people in the community are going to be looking and reaching out for a level of help. It may not necessarily be full financial advice going through a claims process, but this pure notion of philanthropy and gifting is something which, if you were not one of those people that put your hand up, scientific evidence which shows if you are in that group, if you give giving a go, it's a feel-good hormone. It is one which makes us all feel great. And I can tell you, it's a game changer for the client that you're actually giving that assistance and advice too. And in fact, if you extend this into, again, for those business leaders in the room, if this is an area that you participate in, be loud and proud with that work that you're doing. Tell not only your clients, but tell your staff. Obviously they would see, they would probably know it, but this is the sort of attraction where even employees who witness this notion of giving, you can see not only from that stronger leadership perspective, lowers employee absenteeism. You're likely to secure with those staff for a longer period. They get this sense of this is a great advice business to be part of. Helping clients, not just those that can pay the remuneration, but also doing things outside of the typical realm through, say, a pro bono approach. We know from the medical side of things that simply not just being empathetic, which I know many advisors are, but just increasing that empathy to compassion, being able to offer a level of assistance and help can actually lead to a better outcome for those going through an injury or illness journey. Now, if you want a little bit more information about pro bono advice, I think those that put their hands up, that's probably the first place. Speak to your colleagues in the room, get a sense of what their experience is like. I've no doubt, as I've often asked the question, particularly those that do give pro bono advice, the thing that they often tell me is that it really transforms the way they speak to all other clients. It's those stories that really come to the fore, often emotionally driven, but those often get people thinking about, well, this is something maybe I should explore just in case, something like this, God forbid, happens to me. Some information on the far right here, which I thought was quite an interesting exercise. It was a case study that was done out of Canada, where this Canadian study actually followed 3,000 kindergarten kids. So they kind of did a bit of a check on the sorts of behaviours they experienced, with a focus on those who were, willing to be, they had that sort of natural gifting, emotional type element. And what they did is they actually checked in with these same kids 30 years later, and they found this cohort that really were part of that, caring, community, almost empathetic type mindset, actually earned a significantly higher amount of earnings compared to those that were sort of the opposite. A bit more of a tear around, not really showing trust, kindness, that sort of thing. So I thought that was an interesting exercise. But certainly a raft of different research at the ready, I think, to really highlight this notion of giving and gifting, not just in that financial realm, but also outside. So with the FAAA, I think if this is something which resonates with you, if it's something that you're really keen to do, I know Sarah mentioned this as part of her opening address yesterday, which was that both PFAN and the Cancer Council are here on site. So I think if you go through the expo hall, correct me if I'm wrong, but I think they're on the right-hand side as you go in, just past the Zurich stand. So go to the Zurich stand first, then head to PFAN and the Cancer Council. But of course, the principle is there's just no cost to provide assistance to that particular client. Many of you may be doing this anyway, outside of any formal arrangement. But if you can, again, one other action item for you, maybe just take out one of your client meetings every 3 months, just one, and just replace it with a pro bono case. Under the FAAA guidelines, if you're a CFP or an AFP, or if you're neither, but you've actually registered for the CFP certification program, that gives you a tick, then you simply need to just complete the application and get it co-signed by your licensee. That's effectively it. And you're ready and raring to go. So for those of you that had your hand up before, how many of you would recommend other advisors join part of a pro bono experience? So few. Fantastic. So again, trying to be environmentally friendly here. We don't have these leaflets at the Zurich stand, but QR code to access the link, and that'll take you straight to the FAAA Pro Bono website. Now, if you're thinking, Adam, this is great, but I need some more information. If you're not feeling overly comfortable or confident with providing guidance from a pro bono expert, as I've talked through today, you really don't need to be an expert. Just being there, just being a voice of reason can often make a significant difference. We've heard some tragic stories in our business where particularly a cancer diagnosis may occur. Not only do they not have support, but often spouses and partners might think it's all too hard and will actually leave. It's a driver to separate or to end that particular marriage. It can be devastating. Not just the cancer diagnosis, but the significant change in their financial relationship, their complete life is turned around. So often reaching out to someone like an advisor is just a golden opportunity to really provide some sort of remedy. And in terms of tools, we do have a number of them available in our business. So again, what we've got here is a bit of a handy resource if you were currently providing advice in this realm, wanting to know a little bit more about providing support. This is just one example of the many examples that we've got within our business. So folks, in summing up, I'm hoping that this has provided you a little bit of insights and intel into the consumer mindset, into our experience, into the sorts of things that your peers in the life insurance realm are actually doing and doing quite well. So we saw the facts a little bit earlier, but when it comes to things going wrong, we know that illness, they're increasing. Incidences of cancer are increasing. We know there are financial and non-financial pressures there. We know people's lives are likely to be interrupted. And while the community, we know many are uninsured, many of whom are unadvised, some are going to get that financial relief. Some have taken that stance, but others do remain critically unprepared. So the solution, of course, we think, is you. It's guidance, it's education, most importantly, advice remains critical. So folks, with that, thank you and enjoy the rest of your Congress.